everyone, this is Lien. We've got another very busy week ahead of us in the markets. And even though US markets are closed for Good Friday, it's a shortened trading week, there's a lot that could trigger volatility in the markets. I'm on vacation, fortunately for me, not so fortunately for you because we're not doing this live. However, I did want to share my thoughts because I think it's very important for you to learn, prepare, and plan for your trading week, especially with all of these big events ahead. Now, in general, there are four things to watch. Number one, we've got the U.S. retail sales report. Consumer spending is the backbone of the U.S. economy and will play a very important role in not only how the dollar behaves, but also how stocks and everything else moves. We have the European Central Bank rate decision and the Bank of Canada rate decision. We'll look at some of those economy tables that we normally show on Monday at about how the economies have changed since the last central bank met. On top of all this, we still have to have our eye on tariff headlines. We know that China has hit the U.S. back in its latest move with extensive tariffs on U.S. goods. So the question is, how high is the bar going to go? And we know there's a bit of relief from the higher reciprocal tariffs for all the other countries, and there's basically a 90-day reprieve, which should bring a lot of relief to the markets. But with the world's two largest economies engaged in a very intensive trade war, no one is going to win in here. And I think that's why U.S. markets resumed their slide on Friday. It's why the U.S. dollar continued to sell off as investors globally and domestically bail out of U.S. assets. So watch the headlines to see if anything more comes out of that. I'm hoping that there isn't, simply because, the bar seems to be already been moved very high and the punishment on both ends seem to be very severe. But you never know. So keep an eye on the headlines. But in terms of data, there's a lot we can talk about. And let's go ahead and dive into it. So as I said, there are three major things to watch this week: the U.S. retail sales report, the European Central Bank meeting, and the Bank of Canada rate decision. We'll talk about retail sales after we go through the two rate decisions. Now, ECB is actually expected to cut interest rates by 25 basis points. Now, if you look at this table with me, which I always invite you to do on our Monday live stream, I think many of you will agree with me that there have been more green than there is red. This table compares how the economy changed from the last time the central bank met. And as you can see, that there is quite a bit of improvement. And, based upon this table alone, the ECB should actually leave interest rates unchanged. And a lot of this improvement comes from the promise of these governments to provide fiscal support and stimulus in order to offset some of the tariff pain and volatility in the markets. So the confidence in the business activity, IFO, ZOO have all improved. However, there is a lot of volatility caused by the recent tariffs. There will be some, relief and a breath of, fresh air for the markets or for policymakers by the fact that Trump delayed the higher tariffs by 90 days. But the volatility in the markets and the damage has already been done. And so that is why the ECB is expected to preempt a negative impact slowdown in the euro area economy by cutting interest rates by 25 basis